All right, we're live. Welcome to Let's Talk Markets Live on this June 18th. Really excited to welcome Dan and Charlie back to the program. So welcome, guys. Good to see you again.
Hello, Mr. Lauer. How are you, sir?
I'm doing good. Doing good. Good to see you.
Do we get like second timers jackets the way they do on Saturday Night Live?
Yeah.
You know?
That's what we need. I know we have a pretty high bar. You know, you hit number 5, and maybe we'll send you a beanie or something.
That's what I need.
Yeah. Well, up here, we need as many as we can get, but down where you guys are, not as cold. All right. So last fall, we were joined by Dan and Charlie from the Green Impact Exchange, and at the time, GIX was in the midst of a long, arduous journey towards SEC approval for their new stock exchange. In April, that journey reached another milestone when the SEC officially approved your Form 1 application for an exchange license. So, first of all, congratulations. What a journey it's been. I remember, I think, getting lunch one day in Manhattan with you guys throwing out a silly idea to now you are a registered national securities exchange. How about that?
It is a little bit of it does make your mind swim a little bit. The day I got the call from the SEC, I was actually on my way to the grocery store when I got the call from the SEC, and I had this big choice: do I go back up to my apartment and call Charlie, or do I finish my errand? Like that was, we kind of elegant story of how approval comes through. So
we kind of felt like the dog caught the car, and now what do we do?
Right, exactly.
But it's been super exciting. It was great to work with the commission and having this approved under the current administration. I think shows the importance of what we're doing and that kind of sustainability is here to stay. And so we look forward to launching sometime early next year.
It's funny. I was reading an article from Matt Levine. I tend to read his stuff pretty regularly, and what he talked about how for a while there was this concept called a greenium, which was the premium investors were willing to pay, or the reduced yield investors were willing to accept for green projects. And now it's sort of turned the opposite. Now there's green hushing, where companies are downplaying what they're doing from a green perspective, and that greenium has turned into a cost. And so I think your point, Charlie, about how it really means something that in this administration, they still are open to competition to see if this is something that people want, and if so, good, let the market decide, and if not, okay, right?
Yeah, I mean, I would say that we have, there may be green hushing going on, but over the past, I guess people have been reporting to different frameworks for 30 years now through Republican and Democratic administrations, and I think it's that tells me there's more to this than just value signaling. I mean, virtue signaling.
Mm-hmm.
To me, it is a way to drive value. And I don't think all these companies would continue down this path unless it was good for the company and the shareholders and all the stakeholders involved with those companies. So, from our perspective, going out and speaking with hundreds of companies, they're continuing down this journey. And I think it's because it's good for business, and that climate risk is a business risk. And companies recognize that. And they're also pivoting to kind of meet the demands of younger generations and see the handwriting on the wall that they want to be good corporate citizens. So there might be hushing, but it is a trend that is continuing and globally is expanding. I mean, I would say outside the U.S., different jurisdictions around the globe are doubling down in this regard and not abandoning any of this.
All right, so let's take a step back, just for those that maybe didn't see the first episode. why don't we just start with a little refresher? What's GIX? What's your mission? What inspired you to start this effort?
So it started because Charlie and I were doing some consulting work, and we had clients who were coming to us and asking us about this thing, ESG, and how do you match it with capital markets. And the more that we looked at it, the more that we kept coming back to like a couple fundamental questions. First of all, there was E plus S plus G was this like giant mishmash of information, and how do you unpack it? So we said the first thing you got to do is you got to disaggregate it. If you're going to talk about environment, talk about the environment. Don't talk about environment and focus on that. So GIX was initially, our first observation was we're going to focus on sustainability. Second thing was that ESG is looks at information that is backward looking, often highly technical and without context. It's voluntary and it's selected. So you don't necessarily know when you look at the information that you're getting useful information. You're looking back 2-3 years and saying, what did a company do then? When really what investors are trying to answer is the question of what's a company going to do in the next 6, 9, 12 months and longer. And past performance, no guarantee of future results, all that is true. So how do you get to that information? So our second observation was that you need to think about what is the infrastructure inside the company that's going to make sure that those promises they're making actually follow through. Charlie mentioned 94% of investors don't believe the company's promises have anything behind that. So the question is, how do you put something behind that? And the answer, it's a little bit wonky. It's corporate governance. It's what are the things that a company is doing that ensure that it's part of their DNA, that it's not a press release and it's not just a fancy publication on their website, but there's actually something there. So when we broke that down, we came to sort of 3 areas. There's what's the board doing, what's leadership doing, what is management doing to implement the vision, and then what is the follow through and reporting so that you know what you're getting. On the leadership side, what's the board's vision? And is the board committed to real and robust oversight of that vision? Not that it's, Dave is our green guy and we pay attention to him 15 minutes a year. It's at every meeting, there's a committee, there's a charge that it's part of the conversation. At the management level, not only what is the 2050 goal, because let's face it, the guy who's in the seat right now is going to be on the beach drinking a Mai Tai in 2050. It's 3 CEOs from now. So how do we make sure that third CEO is set up for success? So what are the interim goals and targets? And more importantly, what's the strategy? Because if you tell me what your strategy is, if you're trying to diet, you tell me you're going to eat cheeseburgers and eat milk and drink milkshakes, I know you're not serious. But if you tell me all the things you're going to do, I can make an evaluation as a market whether or not you're serious. And then the last piece is the reporting and verification. And that, becomes more meaningful once I know what I'm looking for and why I'm looking for it. Then I can read those documents and I can see, okay, they said they were going to be here. They were going to do the strategy. They're not there. They are there. They're ahead of schedule. Great. And that is all subject to a third party limited assurance. So the controls are sound. So I know I can trust the information. And that was like the theoretical underpinnings of what we were doing. And people thought that was an idea worth investing in. And we've raised seed capital. And we're now raising the Series A to launch the exchange. And in the meantime, we went and got an approval from the SEC.
That's great. Yeah. So what you're describing in terms, so GIX as a new stock exchange will be on par with every other stock exchange. That's how the U.S. system works, right? And what it allows you to do is use your listing standards as a mechanism for standardization and accountability for all of the things that you just described. Is that right?
Right. And just to be clear, we're not primary listing securities at this point. It would be a fool's errand to try to replicate the NYSE and NASDAQ market forces and try to get companies to leave those places, come to us. So
several have tried, none have succeeded.
Yeah. Yes, several have. Only one has succeeded, and that was NASDAQ when they dual listed in the early 2000s. But we decided that it was a better strategy to start with dual listing, and we'll work our way up to primary listings if we're successful. When we're successful, I should say.
I would add one thing is what's super important to understand is when you look at the models of New York and NASDAQ, it's important to understand really why those companies exist and what do they provide to the companies and to investors. And what I mean by that is when a company lists on the New York or the NASDAQ, those exchanges do not say the company's a good company or a bad company, or it's profitable or not profitable. What they do say is that investors can trust the information that is derived from those listing standards to make investment decisions and how they want to deploy their capital. And so we are not anointing companies as being green. As a matter of fact, it's important to understand that we want companies that are not completely green to become quote unquote greener where they can become greener. Because I think it's a disservice to disincentivize companies to try to do well where they can in this regard. And the divestment in the energy complex doesn't seem to make a lot of sense to me, because those are the companies that really need the capital to transition where they can transition. And that's going to take time, right? So to us, if a company is willing to meet our listing standards but are not completely green, that's the impact that we want to have. We want to enable those companies to garner some attention from the capital that's earmarked for investments in the spaces. And I would also say that all the innovation that has taken place in the markets over the last 40 years has been related to latency and fees. Mm-hmm. And there's nothing that's really been done for companies that to raise the capital they need for this green transition. So we think this is an opportunity for companies to attract capital that's earmarked for investments in the space by making a credible commitment to what they're saying publicly.
And do you see GIX facilitating capital formation, or do you think that it's more about the affiliation with GIX is what allows them access? So more indirectly, I guess.
I think those are two sides of the same coin. If you are figuring out which companies are credible, the markets will allocate capital accordingly. Markets are very smart when it comes to, where do I allocate capital? If you look at a company's performance and you say, I think this company is focused on long-term sustainable value, then I want to allocate my capital there. And so there is a cost of capital. There's an allocation effect that we think this provides. And it's a way for companies to distinguish themselves and to really make that credible commitment. Because if you commit on pain of delisting and I just say I'm going to do it, then by definition, what you're doing is more credible. So companies or investors should be looking to put their capital towards you if that's what their investment thesis is. I'm looking for long-term value creation and long-term value maximization and preservation. I should go with Dave's company because he's willing to be held accountable. Dan's company, maybe not.
So what we're really trying to do is solve the trust problem. And to me, that's what markets do, right? And we're supposed to be a conduit of trusted information for investors to use, and then let markets and investors do what they do. They can reward companies they want to support, and they don't have to invest in companies they don't want to invest in. But I think by making that credible commitment, it really shows that a company is willing to walk the talk.
You started, Dave, at the top with the greenium question, and I do think that companies are continuing to invest in sustainable efforts and in the savings that come with it. Just as they may not be talking about it, but that's a temporary thing. I think there's some, as the Trump administration matures in office, I think there will be some clarity as to what are the red lines that people feel uncomfortable about. Where are they okay? But Comcast just opened a new studio in Florida that has like 40% energy savings. Everything is LED. They're using renewable power where they can, doing all these things. They didn't do it just because they wanted to be a good company, although I appreciate it. They did it because they found it was going to save them money, that there was a very significant ROI on sustainability. And so what we're saying is this is a chance for companies to claim publicly some of that ROI. And it's not about, as Charlie says, it's not about I'm a good company, I'm a virtuous company. It's that I'm a company that's smart and sees where the trend lines are going, and I want to be ahead of them.
Yeah. Yeah, no, it's good to hear, and it makes total sense. And again, I mean, you are now in what is probably like one of the harshest and most difficult environments in terms of ESG. But it's a one. This is not, and it's not just confined to the U.S., right? The public companies, even if they're public in the U.S., they have international operations. They have international standards they need to meet. So the U.S. does not exist in a vacuum, and I think you're right that a lot of companies have found that there's a good business case for a lot of these things.
They wouldn't be doing it for the past 30 years if they didn't think it was important to their business. It's as simple as that to me,
Yeah, that's right. So let's take a step back before we get further down this road, and let's just like sort of talk about the mechanics of creating a new stock exchange. I mean, this is a fascinating journey that you guys are on.
Well, first of all, we wouldn't recommend it to anybody, but but it is, it's important to understand that when we started this journey, we sat back, and when Dan and I 5 years ago or 4.5 years ago started to talk about this, we tried to think of any way to do it without becoming an exchange, because we know how hard it is to go through the SEC process, which took us, I guess, about 18 months with, back and forth with comments and drafts and all of these different things with the commission until they approved us on April 11th. But it is not for the faint of heart. Our application was 860 pages long, and I think it weighed over 3 pounds. They made us print it out, which isn't so green. But I have to say that working with the commission was incredible. We've actually had folks from the commission reach out to us to actually want to work with us after the administration changed hands and folks were getting out of the SEC. They reached out and said, listen, we really believe in what you guys are doing, especially some young folks who reached out to us. And are there any openings, because what you're doing aligns with their values and they want to work for a company that's trying to do the right thing. And so I think it is a lot to stand up an exchange. There are tons of requirements and regulatory considerations that we have to put in place, as we should, because it's a significant undertaking. So, there's a lot to do between now and when we launch, but those are all great problems to have at this point, I would say.
Okay, so from that, I got what you said. It's been almost 5 years since you started down the path, and it took 18 months from the submission of your Form 1 to its approval. Is that right?
No, it was just under a year from when we formally submitted, but we went through several drafts with the commission leading up to that.
Got it. Okay. And have you found the commission to be very supportive of what you're doing? Aside, I mean, obviously some of the people there are, but institutionally, what was it like?
So it has had its challenges. The political environment and the legal environment have been in flux. I don't think that's a surprise to anybody who's watching this. Mm-hmm. In December of last year, the Fifth Circuit Court of Appeals invalidated the NASDAQ's board diversity rules, said the SEC had overstepped its bounds in approving those rules. And the court laid down a very narrow test of what is within the SEC's authority. So it was things that relate to prevention of fraud and manipulation and inefficient markets. So we had to retool because the initial proposal that we had was broader than where we are. And the SEC asked us to bifurcate the approval process. We were doing it all in one chunk. We're going to buy, we're going to get the listing rules and the exchange approval all in one bite. After the change of administration, they asked us to do it in 2 bites. So we're in the middle of the second bite. We have a draft of those rules in front of them, and we've gotten very positive feedback. We're working with the staff to provide the clear sort of ironclad value and fraud related case. Greenwashing is fraud kind of case materials to them so that they have comfort in approving it. But the signs that we've gotten have been very positive. And at the same time, the SEC is a smaller organization than it was, which has been an interesting challenge because they've had a number of people, probably about 10% of their workforce has left since January. And because it was voluntary buyouts, it wasn't necessarily the people that you would have pushed out for performance reasons or
a lot of senior people left.
A lot of senior people, a lot of high performers. Yep. So I do think that there is a challenge in working with the commission in that their bandwidth is much constrained at this point. And that's just a performance and physical, limitation problem. And I do think we have to be mindful of the environment in which Chairman Atkins and the other commissioners are working, where they're trying to figure out what is the right balance between regulation and market innovation. And I think the good news for us is I think we're falling more on the market innovation side. I think the sense was that there was maybe an over-regulation on one side. And so if your whole argument was, well, we should regulate, you might not find it to be as good of an atmosphere. But our view is we're innovating for the purpose of companies that want to raise capital, for creating sustainable products, new financial products, new asset classes that will enable sustainable finance to go forward, and that innovation is going to be welcome in DC.
I would also add to what Dan said that if you take a step back and you look at what we're actually doing, we're creating a free market system, right? That companies can voluntarily list on this exchange if they want to, if they see a value in doing so. And they're not being forced to by the government, right? So that in our minds can fit both sides of the aisle because we're trying to do the right thing on the sustainability front, yet it is voluntary for companies. And if they see a value in this, then they can list, but they aren't being forced to do anything internally. And the amount of companies that are out there, not only reporting to one framework, but 2 or 3 or 4 reporting frameworks is pretty incredible. And I think that what we're saying to them is, how do you want to distinguish yourself from companies that are just greenwashing? By making this voluntary commitment to being listed on an exchange where there is oversight of those promises, definitely will allow them to stand out from those companies that are just, they're talking a lot, but they're not necessarily doing a lot. So we think that that's an important distinction as well.
So the court case that you mentioned, Dan, on board diversity, I think that I remember when that came down, it was obviously, given my relationship with you guys, I was very interested in it because I was curious, how did that impact your plans? And does that mean that does that apply to you guys too? So you cannot have board diversity standards as part of your listing standards, or do you see it any differently?
So we haven't explored the board diversity question, so I can't answer that piece of it. But what I will tell you is, so I used to do the rule filings for the NYSE back in the day. And when we used to do those rule filings, we would recite the statutory basis for why this rule was within the SEC's authority. And it was kind of a catechism of, here are the, Section 6 of the 34 Act, if you look it up, has 5 different categories of rules that the SEC has authority to approve. And we would recite for each one of them, it meets this because, it meets that because, it meets the third thing because. And it was it was a little bit of a rote recitation, I'm not going to lie. And what the court said was, that's not the way to do this kind of work. What you really need to do is, if the rule focuses on one of those things, like, for example, creating fair and equitable markets, preventing unfair practices, then you need to explain how does that rule really relate to those things. You can't just, sort of mouth the words and one sentence and that'll be fine. So in one way, what the court was doing was saying, you have to be more careful and clear in what the connection is. Specifically with respect to board diversity, what the court was saying was, there was not a clear straight line from the board diversity proposal that NASDAQ put in place and fraud prevention and manipulation prevention. That since that was the major thrust of the act, the court said, without that direct line, the SEC's authority is murky in that respect. I think that greenwashing is entirely different. I think there's no question that greenwashing is about telling investors what they want to hear in the hopes that they will bump this price of the stock for the benefit of the company. And, it's interesting. There was a brand reliability survey done recently by a large consulting firm that talked about how much of a brand value is about sustainability and how much is about other things. So if you look at Coca-Cola, some portion of Coca-Cola's brand value has to do with its water usage and its image of sustainability. Same thing with Subaru, and like there are other companies where brand value equates to partly about sustainability. And then you can measure what's the difference between the actual value of the company's performance and the brand value. And if the brand value is greater than the actual performance, that's value at risk for investors, because you're investing in something that doesn't actually, as the company isn't performing to that level. If the brand value is below sustainability and what they're actually doing, well, that's an opportunity for investors. And as soon as you start thinking about sustainability in terms of value at risk and value optimization, now you're squarely in investor land. I mean, you are squarely within what the 34 Act and what the SEC are supposed to be doing, which is, are companies goosing the numbers? Are they making claims to try to to increase that value of brand perception? Like, you can't get more straight line than that. Yeah. So I don't feel like we're in a situation where we're going to be unable to do what we want to do. We're not going to tackle board diversity at this stage, because I think it's outside of our public benefit mandate. Although we certainly are trying our hardest to assemble a diverse board and to be mindful of all of those things as we're building a company, because we see a value in it. We see a reason that it returns value to the company. And so that's,
it's pretty good academic research to bolster that idea, right? It's pretty solid.
There's a lot of data that shows
diverse boards. The company return on equity is usually higher with.
There's no question about that. It was a question of what the court's view was. It was about fraud, and does a diverse board have a lower propensity to fraud than a non-diverse board? And I think the evidence is a little less clear on that. Certainly returning more value, but the SEC, the court's view was, the SEC is not here to help companies maximize value. We're here to protect against fraud. It's a little bit of a
the other thing I would say with respect to this is, if funds or retail, or if any investors are using the information that they're getting from companies about their sustainability journey in terms of allocating their capital, then that information should be truthful. And right now, there isn't a way for that to really exist in the current ESG ecosystem, because the accountability and enforceability about these promises is not really there. Mm-hmm. So I think that, personally, that if folks are using this information as one of their decision points of whether they're going to invest in a company or not, then that information should be truthful. And I think that's hard to argue. If it's false, there's a reason why the company is doing it, right? The company is touting themselves in this regard to make themselves look better than how they would look without doing it. There'd be no other reason to do it.
Right. They obviously see value.
There's no
holding
question.
Themselves out that way.
Right.
So let's. You mentioned earlier that you're projecting to go live next year. What does that road look like? What has to happen between now and then? And are there regulatory hurdles, or is it mostly logistics?
It's more logistics. What it really means is, between now and next March, Charlie and I don't sleep. But realistically, what it means is there are, what you're doing is you're trying to merge into a highway that's going 90 miles an hour. So you have to have your technology all in place. We're using technology provided by Memex Technologies. So we have the advantage of, we have a sports car that can get up to 90 miles an hour, but we have to do all of the work to connect ourselves to that. You have to sign up your members, and you have to do all of your testing and all of the technical things that make an exchange run. And then at the same time, we're continuing to recruit companies to do the listing side of this. We had a lot of companies who said to us, we're very interested. We want to see what happens with the approval. So now we have that box checked. But the SEC did us a lovely favor of approving us right in the middle of annual earnings seasons. So every IR professional and CFO that we talk to says, talk to me in June or July, because I'm getting all of my reporting done for the end of the quarter, end of the year. We're like, thanks, SEC. That's timing is everything.
I would also say that we've had a lot of international interest, not only from companies that trade as ADRs, but from other exchanges as well globally have, since the approval, have been reaching out to us to think about interesting ways to partner.
Nice.
Yeah. And then you mentioned the regulatory side. We're continuing down the road with finalizing the sustainability rules. There are other picayune and tedious regulatory things that one has to do, including topics that are near and dear to your heart, like joining the Consolidated Audit Trail and and Securities Information Processor and all of that fun stuff. So we'll have fun with that stuff.
So do you see yourselves? I assume you want those listing standards approved before you go live. Is that accurate?
That is ideal, and we're given the pace of things and where we are with the SEC, we're confident we're going to get there. So I'm working on the assumption that that's going to happen.
Okay, and so then let's also work on that assumption, and I guess, do you already have a group of committed companies that have said, once this is in place, we're in and you'll be debuting with companies, or is it more of a, you've still got some work to do on that front?
I think it's both. We have a few companies who have said we are excited to move forward, and we have about, I would say, 30 to 40 companies who are in active discussion, active interest. Our goal is to put together a class of 15 companies to launch with, by next March, and one of the things that we've learned about companies is that if it doesn't happen in this fiscal year, they'll worry about it later. So we're there's a little bit of inertia where companies say that, when is it, March? Okay, I'll keep talking to you. We're not going to make a decision just yet. So, but the conversations have been very, very, very positive.
Okay, that's good. But that's that idea of working with international exchanges is a pretty interesting one. And I don't know how much you can go into this, but is the thought that you could be looking at like cross-listing companies from other countries into the U.S.?
Yeah, so we've had conversations with exchanges and with we'll call sort of interested governmental related parties in various places around the world. The idea is that certainly in Asia, in Europe, in places in the Middle East, you are seeing more of a focus on sustainability and more directionally positive movement on sustainability. And those companies are doing things that are positive for the environment and doing positive things for their businesses to be sustainable. And they are also looking at, how do I access the U.S. capital markets? Because for everything that's going on politically or not, we are still sitting in the place that's 40% of the global capital markets centers in the U.S. And so companies are saying, how do I distinguish myself in that market? GIX becomes an interesting opportunity because they don't have the same kind of worry about political backlash if it's going to come, because they're sitting in jurisdictions where it's a priority for them. And there's a way to connect to the 30, 40, 50 trillion dollars of sustainable investments that are sitting here and looking to deploy. So it's a good match. I had a meeting yesterday with an Asian company that is a conduit to lots of potential listings. We've had meetings with a Middle Eastern company that is a conduit to listings, some South American companies. So there are interesting opportunities. It would either be direct listings where they're listed in their home country and we would bring them to the US, or it would be issuing ADRs that would trade alongside the foreign ordinaries.
Okay, that's a really compelling model, because it's still sort of, you're still not quite the primary listing, but then you're a bit more than just a secondary listing, right? It's like sort of a hybrid.
I would just say that from our perspective, there were a lot of exchanges that have tried to go down the route of listing companies. Many of them tried the primary listing route, which is very, very difficult. And then some have tried the dual route, but I don't think that their model really added something strategic to that listing. It was just another listing, right? And to us, we add a strategic credential that we think is interesting for a company. And I think that is a differentiator for us in building out GIX. So it's not just your typical exchange. Dan said something earlier also, and I just want to mention this for people who haven't heard about us, but we are the only stock exchange that is set up as a public benefit corporation. And we will be giving 1% of our revenues, not our profits, but our revenues back to the environment through NGOs like the Nature Conservancy and others. We want to be part of the solution, not part of the problem. So that's important to everybody on our team. And I think that is also a differentiator that should help us succeed.
And I'll go one step deeper on that, which is it's actually built into our corporate governance documents. So as part of the board's consideration of what direction should we be going, what opportunities should we be pursuing, the board is required to consider the public benefit purpose, in our case, sustainability, alongside fiduciary duty and other corporate duties. So it's not just, oh, it's a pretty thing and it's a nice little charity thing. It's actually baked into the corporate governance requirements that we as a board have.
I'll tell you, I don't think people understand how important that is and how meaningful it is. And I can tell you from personal experience, having been on a board and having been presented with a situation where fundamentally, if I'm acting as a fiduciary and I have the mandate of maximize shareholder value, and that is your legal obligation, versus what is best even for markets, let alone the idea of public benefit, because it's happened. I've been faced with that choice and been in the personal position where I felt legally I couldn't make the choice that I thought I should, because legally it very, very icky, and it's you're confronted with this situation where, like, if I were going to do what's right, I would make choice A. But I think I'd be sued if I did that, right?
Exactly.
I would open myself up to legal culpability, and it is a choice that boards have to make on a regular basis. And I've rarely, other than like the idea of the public benefit corporation, I've rarely heard of a situation in which this is nothing more than lip service, what you're talking about. So I really think that you living that and eating your own dog food, as it were, is both really important and impressive, but it provides a framework for other companies to follow that same path.
Yeah, I'll give you an example of how it worked actually in a non-PBC context. There was a famous case where the NYSE got an application for listing from, I think it was Hustler magazine, the publishers. And the NYSE was like, we don't want to list them because it's antithetical to our brand and our values as a company, et cetera. And fortunately, exchanges have built into their rules a little bit of latitude on who they can list and who they can decide if it's detrimental to the market, they didn't have to list it. But there are companies that face that kind of choice every day. I've been presented with an opportunity that's too good to pass up, but it's really not what I think is right for us as directionally. What do I do with that? So we have, that situation. You may come across a company where they say, to heck with you guys, we're gonna own the libs by being the dirtiest, worst, terriblest company, and we're gonna meet all of your standards. Just in order to sort of flout it and stick it to you. Well, we have an obligation as a company because of our public benefit purpose. We have the ability and the obligation to look at that from a different lens than just, does this maximize the total number of dollars in the door on the front end?
And I've often talked about the conflict of interest that publicly traded for-profit exchange families face when they're trying to maximize shareholder value on the one hand and maintain fair and efficient markets on the other. And those two things can often be at odds with each other. And if you're a publicly traded for-profit company whose sole mandate is to maximize shareholder value, again, legally, you have to do the thing that's best for you if it's ever in conflict with what's best for markets.
I don't think I've ever been happier not to be a public company, much as I'd like to be, given the conflict you just laid out. I'm okay for a little while still. Until things really take off, we're still a private company, but we still think about that every day. How do we balance those things to make sure that we're doing the right thing?
You know, Dave, just on another note, since we got the approval, and maybe a little bit earlier than that, excuse me, I would say that we've had a lot of interest from thinking about how can we use this platform to help in other ways too. And I don't picture us at the end of the day, and I used to say to Dan when we first started this, we're not going to look anything like we think we're going to look at the end of this journey. Mm-hmm. And we have found that there are a lot of opportunities to introduce new financial products related to sustainability, mm-hmm. That we could potentially list and trade on our platform. And you know, without getting into too many specific details, that is an area that I think is extremely interesting and something that could be another differentiator for us. So while we're going to list companies and we're going to look in some ways as a traditional exchange, there are a lot of things that we're considering that will move us out of that stereotypical model, and I think will be interesting to folks to understand once it's more a little fully baked and developed.
Yeah, I mean, I think your point earlier, which was the entirety of exchange competition in modern history has been on speed and fees.
No question.
You know, in IEX aside, where IEX brought some actual innovation into the space, but really that was the first. And you guys are talking about a completely different type of innovation. But I'm not a big believer in exchange competition because I think it hasn't brought us anything until IEX and now you guys, which is why it's very exciting to me, because I think that it's been a shame that like the entirety of innovation has been around speed mostly and complexity of fee structure and order types rather than actual innovation. And I think what you're talking about there, Charlie, which is that it's not even just about creating standards and something that companies can hang their hats on, but actually listing new and innovative products that there is demand for, and doing it in new and innovative ways. It just seems like that is an area that is so ripe for disruption.
It absolutely is. Go ahead, Dan.
And I think it comes back again to the public benefit purpose. We start a conversation with, okay, what does a sustainable company need? What does a sustainable market need? And how can we leverage the facilities of an exchange to advance towards that goal? It's not how do we make more money and how do we get trading to be faster and cheaper. It's what does capital need? And that was where exchanges started their existence, is how do I get capital? How do I diversify my capital base? How do I ensure fair pricing and all that stuff? And we've moved so far away from that to the point that less than half the market is now trading in lit markets. Like now we're 51, 2%. Which is crazy. Because what does public pricing mean if less than half the market is public?
Yeah,
I'm not even sure what we're doing at this point, but that's a separate discussion.
Yeah. That one I could go on and rant for a while. So we're going to steer away from that because it's nuts. But yeah, point taken. An important point. Right?
It's nuts, and that's why on the capital formation side, I think that the ripeness for innovation on the capital formation side is just sitting there, and we think that is really, there's just so much fertile ground to till in that area.
Well, there is so much capital needed for this transition, and what we're trying to do is connect that capital to the companies who need it, and I think that is that's part of this whole mission, is to say, how do you get the capital in the hands of these companies that need it for the transition that has to take place? And part of that, I think, is the trust factor. And that's why listing on GIX should help. I mean, if you look at the green economy mark in London and how that model works, all the companies who've made that list, which is if 50% or more of your revenues come from sustainable sources, those companies have outperformed and outraised their peers dramatically. So what we're saying is, why shouldn't that same kind of model exist in the US, where companies can strive to meet a certain barrier and voluntarily list on this exchange? Well, if they're willing to do that, we believe that they will attract the capital that's earmarked for investments in the space.
Sounds like capitalism.
Totally.
Amazing, isn't it?
Amazing, right? I know. This is why I love exchanges, right? Yeah, exactly. I think exchanges serve such a critical purpose as that the engine of capitalism, right? These are the gears that keep things moving and that allow the market to operate. And again, the lack of innovation in the space has honestly just been staggering.
Yeah, it's amazing because the mythology of the exchanges is so powerful. Like the NYSE in the 50s and 60s did a series of cartoons that were all about the capital formation process. And the John Q. Public and his little oil drum company, and he runs a little car and he picks up an investment banker. And then they go to the SEC and they pick up an SEC guy and they drive around.
Oh, no way! I got to see these.
Oh, I'll find it and send it to you. It's a wonderful person, but it has nothing to do with the speed and price of trading. It has everything to do with all the stuff we're talking about, because that's what built it up, and we've moved away from that. I think it's good to remind ourselves of that. So,
okay, so you keep talking about public benefit and who benefits from GIX. So let's talk about investors. Like, does this create a new type of access for everyday investors? And if so, like, how do you see this engaging and providing innovation and benefit to everyday investors?
So my fondest hope and desire is that I can convince every retail investor to call their broker dealer and say, I would like to be able to direct my orders to GIX. You and I both know that there are certain broker dealers for whom that's a non-starter.
Yeah.
And so there's a little bit of investor education that has to happen to say, you do have that right, you do have that option. You might have to pay a little bit for it. That's the downside. So in terms of how can I get directly to retail investors, it's a challenge because I'm structurally blocked by the practices that have developed over the last 15 years or so. But having said that, investors are consumers, investors are employees, investors can signal to companies in that they care about the long-term value. They care about the both the immediate profits, but also they care about whether the company is going to succeed in the long term because they've adapted, they're resilient, they're prepared for the green transition. And so even if it's not directly through voting with their dollars, they can still buy green ETFs. They can buy green product. They can support the companies that list on GIX. And we'll get you there. We'll get them to the point of being able to direct their orders to GIX someday. I promise.
Someday.
But then the other piece of it is Charlie mentioned the innovative financial products. One of the just to preview quickly, one of them involves the ability to transact and buy and sell carbon credits through a regulated market, which is something that doesn't exist today, and which I think a lot of retail investors would welcome the opportunity to support the development of projects that generate carbon credits. And one way to do that would be to be able to buy and sell these carbon credit products. So we'll have a lot more to talk about on a future episode of this. When I get my fifth jacket, we'll have a lot to talk about that. But I think that's another example where the products that we're trying to innovate and create are ones that would be accessible to investors who may not have been able to participate in the market so far.
And I just the other thing I would add to that is we are also contemplating some very interesting ideas around the digital side of the world as well. So we see kind of the direction of where things are headed in the future, and we have some super interesting ideas around how we can leverage that technology and a digital platform to also help us with what we're trying to create under the GIX banner.
Yeah, I don't know if you guys saw the crypto roundtable that I was on a couple of months ago, but it was all about trading and crypto, and I really, I spent quite a bit of time making the point of how important it was to engage national securities exchanges in that process. And I think that was sort of one of the central points of contention on the panel was, should this be an ATS, driven activity, or should it be an exchange-driven activity? I could see both perspectives, and I think both can coexist. But to me, the National Securities Exchange plays such a central role that it really would be a disservice to not ensure that the ability, for example, to trade, a listed crypto asset, a digital asset security alongside, a commodity, right? Like something priced in BTC, for example, as an example, it is a really critical element to fostering a robust crypto ecosystem, and one that is well regulated.
I totally agree. And like, I watched you. I'm not just saying this because you're the host and you control the feed. I watched in real time, and I agreed with everything you said about that. But I will say it's interesting that sustainability and sustainable assets actually provides an interesting use case for marrying traditional and digital markets. Because candidly, if you're going to tokenize stocks, you have to undo 50 years worth of centralized accounting and book entry accounting and net settlements and all the things that we've built up since the paperwork crisis in the 70s. You have to kind of undo those to walletize that. With sustainability and sustainable assets, like just even take carbon credits, for example, they benefit from the traceability and the accountability that comes from blockchain applications. And so they kind of can be the digital native assets that you move onto regulated platforms as the use case that proves out that we should do this at scale for the rest of the market. So
yeah, they not only benefit from the traceability and transparency, but they really benefit from the standardization, right, and fungibility.
That's right.
And the ease of market access and
right.
The
Dan, don't give away the shop, Dan. Don't give away the shop.
All right, we're gonna cut it there, guys. There.
Yeah. Holy moly.
No, but it's a fascinating conversation.
So anyway, so that's to Charlie's point about digitization. That's why we're excited about it, because we see overlap and connections between what we're doing on the sustainability side and what you were championing on the roundtable.
And we've had a large amount of interested groups talking to us about that area. So I think it's something that we will be laser focused on for a while.
That's great. That's great.
Watch this space. I think it's
watch this space. Well, look, this is. I appreciate you guys coming back on for the second time. We'll get you to that fifth one, but I mean, the point is that we're doing this in a couple of different lanes, but following, the evolution and establishment and your journey to create this new exchange. I mean, it's fascinating both from the perspective of what you're doing is important and innovative, and it's the idea is a long time coming, but also for our audience, like there's never an opportunity to be in the room as a new exchange is created, and I think there's a benefit to seeing what it's like to go through this process, how you're thinking through these issues, how you're trying to innovate. A lot of people hear about exchange innovation, but again, almost the entirety of that up until now has not really been very innovative, or it's not really benefited the average person or sort of aligned with their values. And I think now, seeing what you guys are doing, I just think it helps to bring people closer to the market and market mechanics. So, I really definitely appreciate you guys coming on, sharing your time with us, because I know how crazy busy you are right now and how little sleep you're getting. And you might not even remember any of this because you're walking through a zombie-like haze. So thanks again for
we knew when this started that it was going to be a big lift. But I will tell you also that the team that we have assembled and folks we're speaking with who we will bring on, they have been incredible to work with. They have been amazing folks that have years and years in this area, and they're committed to the vision. So, I want a big thank you to them for standing by us over the past few years, because without them, we wouldn't be where we are. And now as, what did you say about Pinocchio, Dan? It's becoming a real boy.
Yeah, we were cutting the strings. He's becoming a real boy. And so that's an exciting moment.
Yeah. So thank you so much, Dave, for having us on, and wish you continued success with your endeavors, and really appreciate it.
Thank you. Likewise. And again, thanks everyone for joining us on Let's Talk Markets Live this June 18th. We will be back next week with what might be our final episode for a while, as we're going to go on hiatus for July. But next week, we'll welcome back Eric Smolinski, who's, I think, probably well past the 5 appearance mark now, so we might owe him a toque, which we just made up on the spot today. Yeah, we got to get him a jacket. But he'll be here to talk markets and options, and where he sees things going right now as volatility has been increasing and uncertainty has been increasing. And it'll be an interesting conversation. But again, thanks, Dan and Charlie, for joining us. And make sure to hit that like and subscribe button, and we will see you guys next week.
Thank you, everybody. Good to talk to you.